Good morning. Thank you all for being with us today. Call this hearing to order. While our economy is showing signs of improvement, access to capital continues to be a major challenge for small businesses, startups, and entrepreneurs. Although we are working feverishly to roll back red tape, small businesses face an uncertain lending environment that is compounded due to their reliance on traditional bank borrowing to raise capital. This committee is striving to create an environment where small businesses can expand and create jobs. One program to bridge the funding gap that too often acts as a roadblock for small business is the SBA's 504 CDC loan program. The 504 CDC loan program, which is the topic of today's hearing, combines a partnership with community development companies, also known as CDCs. The program is uniquely structured to offer credit-worthy businesses an opportunity to access capital. First, to be eligible to participate in the loan program, the borrower or small business must meet certain job creation or job retention requirements. However, if these requirements cannot be achieved, the small business still has the ability to participate if community development or public policy goals are met, such as improving, diversifying, or stabilizing the local economy. Beyond the economic development requirements, the 504 CDC loan program offers a distinctive finance structure where the private lender is responsible for 50% of the total cost of the project, the CDC is responsible for 40%, and small business borrower is responsible for 10%. I look forward to hearing more about this program from our witness panel this morning. What is working, what's not working, where can there be improvements? As we work to assist small businesses, it is important to hear from those who have on-the-ground experience with this program. I appreciate all the witnesses for being here today. I look forward to your testimony. I now yield to Ranking Member Evans for his opening remarks. Thank you, Dwight.
Good morning. Thank you, Mr. Chairman. In order for small firms to play their traditional job-creating role, a number of factors must be in place. Perhaps the most important ingredient is the availability of capital. However, obtaining conventional credit can only be particularly difficult for small businesses, making the Small Business Administration lending program critical to filling this gap. As a result of the SBA programs, entrepreneurs are providing with greater access to capital through the extension of federal guarantees on a long-term basis. Namely, the SBA 504 program helps small businesses obtain long-term financing for major assets such as real estate and equipment. It gives them much-needed access to capital on par with their larger counterparts. Most importantly, financing under this program is secured through a unique three-part structure, requiring as little as 10% put down by the small business borrower. The rest of the funds are provided by the banking partner at a 50% and 40% by a certified development company, a local nonprofit corporation. The 504 CDC program was not only designed to assist small firms in obtaining necessary capital, it was meant to spur economic development and create and retain jobs. Since its inception, the program has supported over 2 million jobs. In fact, a 2-year study of the program concluded that 2/3 of the borrowers reported job growth within 2 years of receiving the loan and averaged nearly 12 new jobs. It should also be noted that the 504 program experienced 3 consecutive years of growth and grew nearly 7% to over $4.7 billion in the fiscal years 2016. Nevertheless, a few issues have been presented to the committee that may point to ways that the program could operate more effectively. For example, concerns have been raised about the decline in loan values since the program's peak, as well as the secondary market and the use of 7(a) loans over 504 loans. And while the 504 loans were made through the United States and U.S. territories, they tend to be concentrated in very specific areas of the country. For instance, just over a handful of states accounted for over half of those approved loans. I applaud the great effort made by the lenders making these loans, yet I am disappointed that just over a quarter of 504 loans are not going to minority firms, and that many lenders remain somewhat hesitant to approve more than a few of them each year. I hope to hear from witnesses about finding solutions to improve the program and reach more underserved population. Today's hearings provide us with an opportunity to hear experiences of 504 partners and what can be done better to facilitate the use of the program. Overall, we are seeking to ensure that the 504 program works for the CDC's banking partners, who in turn must make it work for their small businesses borrowers. On that note, I would like to thank our witnesses for taking time to be here. Their views and experience will be valuable to this committee as we consider best entrepreneurs' capital needs. I yield back. Thank you, Mr. Chairman.
Thank you, Mr. Evans. If committee members have an opening statement prepared, I ask they be submitted for the record. I'd like to take a moment to explain the timing lights for you all this morning. You will each have 5 minutes to deliver your testimony. The light will start out as green. When you have 1 minute remaining, the light will turn yellow. Finally, at the end of your 5 minutes, it will turn red. I ask that you try to adhere to that time limit. If you go over here, it's okay. Start off with the introductions. Our first witness is Natasha Mertz. Ms. Mertz is the Vice President of Commercial Lending at Langley Federal Credit Union in Newport News, Virginia. She has spent years working in the financial industry with both credit unions and community banks. In 2014, she was named a National Financial Services Champion of the Year by the Small Business Administration. Ms. Mertz is testifying today on behalf of the National Association of Federally Insured Credit Unions, and I appreciate you being with us here today. Thank you.
Good morning, Chairman Brett, Ranking Member Evans, and members of the subcommittee. My name is Natasha Mertz, and I'm testifying today on behalf of NAFCU. I appreciate the opportunity to share with you my experience with the SBA's 504 loan program. The SBA's 504 loan program helps lenders provide small businesses with long-term financing to acquire and improve major fixed assets such as owner-occupied commercial real estate and heavy machinery. The program helps businesses by giving them access to financing backed with as little as 10% owner equity. Under the program, a financial institution partners with the CDC, a specialized SBA-certified nonprofit corporation, to finance small businesses looking to expand. Each partner makes a loan to a qualifying small business. Typically, the lender's loan is secured by first lien, covering 50% of a project's cost. The CDC's loan is secured by second lien for up to 40% of the project's cost. The CDC loan is also backed by 100% SBA guaranteed debenture. Participating with the CDC helps reduce risk for the lender. The SBA 504 program has helped us meet some specific needs for our small business members at Langley. For example, we were able to help a successful hotel operator who needed to purchase office space and was declined by a conventional lender. The borrower came to Langley asking for financing options. With the help of the 504 program, the borrower was able to purchase an office building and lock in a great rate for 20 years. There are many more stories like these of small business owners looking for that loan to enable them to start or grow their business. At Langley, we're pleased that we have been able to help step up to meet this demand using the 504 program. Some of the benefits of the program for borrowers include low fixed interest rates for long terms and affordable down payments as low as 10%. Additionally, new businesses are eligible, and the CDC can help make the application and approval process seamless. The program also has features that can make it attractive for lenders. These include the CDC being responsible for determining SBA eligibility, meaning the lender does not need an in-house SBA expert. The lender treats their portion of the 504 as a regular commercial loan, which does not have SBA reporting requirements. There is a low loan-to-value on the lender's loan after the debenture funding, and lenders can participate out their portion of the 504. Additionally, the new debt refinancing option has created more opportunities for lenders to offer 504 loans. While there are a number of benefits of the 504 CDC program for lenders and borrowers, there are challenges and areas where we think it can be improved. These include partnering with the right CDC is critical for the lender, as not all CDCs are consistent in their processes. The 10-year prepayment penalty makes it less attractive for the borrower. Construction loans in the 504 program will not close with the SBA until construction is completed and the borrower has moved into the new facility. And lenders should be allowed to collect payments and remit to the CDC on a monthly basis, as some borrowers prefer not to make two payments. Credit unions also have a special challenge with 504 loans as they have an arbitrary member business lending cap. Government-guaranteed portions of SBA loans do not count towards this arbitrary limit. However, a loan issued by a credit union in a 504 loan is a regular commercial loan that counts toward it as it does not have a government guarantee. Congress should aid credit union SBA 504 lending by exempting SBA 504 loans made by credit unions from the cap. In conclusion, the SBA's 504 CDC program provides much-needed opportunities to established and fledgling businesses. Still, there are several relatively simple steps that could propel the program to its full potential. We would urge Congress to ensure credit unions can meet the needs of their small business members. I thank you for your time and the opportunity to testify before you here today, and I welcome any questions that you may have.
Great, thank you, Ms. Mears. Our next witness is Wayne Williams. Mr. Williams is Senior Vice President for the Business Finance Group in Fairfax, Virginia. They also have an office location in Midlothian, Virginia, which is in my district. Mr. Williams has spent years working in the banking industry and has been with the Business Finance Group since the late 1990s. He is a former chapter president of the American Institute of Banking and an instructor for the Risk Management Association. He was also a 2009 Financial Services Champion Award winner, and so thank you very much for joining us today.
Chairman Bratt, Ranking Member Evans, and other distinguished members of the committee, good morning, and thank you for inviting me to testify. My name is Wayne Williams, and I am here on behalf of Business Finance Group, a nonprofit certified development company headquartered in Fairfax, Virginia. Our mission is helping small businesses succeed, strengthening our communities, and promoting economic development through job creation. The 504 loan program is vital to that mission. We are one of 230 CDCs nationwide, and while our markets may be different and we vary in size, we all share a commitment to assisting small businesses and promoting economic development. Our story is their story. Business Finance Group was originally certified in 1982 as Fairfax Local Development Company, operating in a single Northern Virginia county. In 1994, SBA designated us as the statewide CDC for Virginia. Regulatory changes in 2003 created local economic areas and statewide certifications, and we gradually expanded into Washington, D.C., Maryland, and the Panhandle counties of West Virginia. We have consistently been the most active CDC throughout our jurisdictions as our board and staff continues to earn the respect and trust of SBA, our lending community, and our small business owners. Business Finance Group, like the other 230 CDCs nationwide, has assisted thousands of small business owners to access the capital they need to expand and create jobs. Since 1982, we have provided 504 loan approvals to over 2,800 companies, totaling $1.6 billion. And in turn, the small businesses in our loan portfolio have created and retained approximately 42,000 jobs. In addition to 504, we became an SBA intermediary lending pilot program lender in 2013. Small loans for working capital and equipment are not readily available from traditional lending sources, but are essential for businesses to grow and create jobs and promote economic development. Last month, I celebrated 20 years with Business Finance Group. During that time, we've grown from 8 to 26 employees. Many of my coworkers have also been with us a long time, but we all value that 504 lending not only helps small business owners, it also strengthens communities. Communities like Midlothian, Virginia, where 504 assisted Adriana and Kent Lavorne. Their business, VMAX Sorting Technologies, is a manufacturer of seed grain counting machines for agribusinesses. The company has developed software that allows those machines to not only sort products based on shape and color, but the machines can also provide analytical data on the sorted output, something their competitors' machines could not do. So their business was exploding, but they had insufficient production capacity in their small lease space. And the owners couldn't tie up all their cash in a real estate purchase when their business was expanding rapidly. With 504's 90% financing, it became a perfect solution. The company purchased a larger facility, had expansion space, and the owners had cash preserved for their business growth, and they added 4 new jobs. Or in communities like Alexandria, Virginia, where 504 assisted Karen and Bill Butcher and their company, Port City Brewing Company. After a dozen banks turned them down in 2009, we were able to say yes, and they became the first production brewery to open in the modern era of D.C. area breweries. And they've been a leader in the modern era of D.C. area breweries and been a leader in the expanding craft brewery market throughout the Mid-Atlantic and the United States. Their award-winning brewery is now on tap from New York, North Carolina, and on the shelf in Wegmans and Safeway. They now employ 37 people and are in the middle of a major expansion funded with 2 new 504 loans and state and local grant money, creating 26 additional jobs. Beyond these specific examples, I'll also share that I've seen 504's ability to help preserve jobs in rural communities like Tazewell, Virginia, or transform once neglected urban corridors like 14th Street Northwest or 8th Street Northeast right here in Washington, D.C. These were our stories, but they reflect an experience of my colleagues from around the country. The 504 loan program works. It creates jobs. It promotes small business. It promotes economic development. And it operates at 0 subsidy. We take pride in that, and we accept responsibility to maintain it. Thank you for inviting me to testify. I'm happy to answer any questions.
Super. Thank you, Mr. Williams. Our next witness is Barbara Vorzek. Ms. Vorzek is President and Chief Executive Officer for the National Association of Development Companies, also known as NADCO, which is the main trade association for certified development companies. With vast expertise spanning decades, Ms. Vorzek was the founder and executive director of the California statewide CDC and a founder and director of Community Business Bank. Thank you very much for joining us today.
Thank you, Chairman Bratt, Ranking Member Evans, and the other distinguished members of this committee. Thank you for asking me to testify. I appreciate it. My name is Barbara Vorzek, and I'm here on behalf of the National Association of Development Companies, also known as NADCO. I represent, or our program, our association represents about 95% of those 230 CDCs. As has been mentioned, they are nationwide. They're largely nonprofit entities. I think we may have 2 for-profit or 3 out of the 230 that are grandfathered in from many years ago. I understand the work of CDCs because, as was mentioned, I ran California statewide for 21 years, founded and ran it, and at the time it was the only statewide when we founded it, because at one time statewides were developed originally to be safety nets for interurban and rural areas, and that's why California statewide was created originally. CDCs, as was mentioned, are here to support small business and economic development. There's one CDC covering each congressional district in the country, creating jobs and supporting small business owners and other community development activities. My colleagues here can speak at great length about what happens every day, but what really unifies us as an industry is the fact that we provide the 504 loan program. I'm not going to go over the 50-40-10, that was very well laid out. The number of jobs we've created again and the number of loans has already been discussed, so I won't cover that again. I will cover a couple of things related to that. The SBA right now, we have a 10 and a 20-year debenture. The SBA has green-lighted. They are in the process of rolling out, hopefully within the next 12 months, a new instrument, a 25-year fully amortized 504 fixed-rate loan. The industry is very excited about that. That will enable small business owners to get lower payments on a monthly basis, and that's definitely needed by some of our small businesses. But one of the main benefits of the 504 program beyond that fixed rate is the fact there are no balloons. It's fully amortizing, and so it's a product that the business doesn't need to worry about having to refinance it in 5 or 10 or 15 years. Right now, we are 50-40-10. Our maximum loan is $5.5 million. The average loan is much larger than that, well under $1 million. It was mentioned that our program involves debentures. Just to make clear what happens there, they're federally guaranteed debentures. The reason we get low fixed rates right now, it's around 4.6. to the borrower is because those are federally guaranteed debentures that are pooled and sold on Wall Street on a monthly basis. Any given month, we'll sell between 300 and 400 million in, and we get a great rates. And of course, right now with the yield curve flat, we're getting incredible rates for our small businesses. We're very pleased about that. We know that because there's such low fixed rates right now, that those businesses can grow and create more jobs quicker because they have more working capital available to them. I did want to mention that while we help many neighborhood businesses, you know, the local, well, used to be the local video store, that's kind of being phased out, but you know, the grocer and different things that you find locally, that we also have been, and I think Wayne mentioned Port City, but another national brand, many of you may have, and I can't tell you how often the OtterBox was a 504. Otter is a 504 borrower, and I would not have an intact iPhone that's 4 years old were it not for this OtterBox. I can't tell you how many times it's fallen from the Stairmaster. But it just keeps on ticking. Many of you may eat yogurt. Chobani yogurt is a 504 product, as well as if you're into music, South by Southwest is a 504 product. So we do 504, we create jobs through that program, but we're also, as Wayne mentioned, the intermediary lending program. We also have other programs that our CDCs are involved in through SBA, like the intermediary lending program, as well as the Community Advantage program. But they also will often be engaged with the small business development centers, SCORE, other organizations that are devoted to small business and economic development in their communities. With that, I will end, and Wayne was precise. I think you were almost just on 5. I will end slightly early, but I want to just finalize with a statement about how great the 504 program is as a tool for small businesses and also for the communities in which those small businesses are growing. And thank you again for having me here.
Thanks, Ms. Borzak. Very good. And I'll now yield to our ranking member for the introduction of the final witness.
Thank you, Mr. Chairman. Good morning. I'm pleased to introduce Sherwood Roberts, Managing Director of the Southeastern Economic Development Company of Pennsylvania. C Corp, right, is the leading certified department corporation in the Commonwealth, approving over 325 loans over the last decade, and borrowers committed to creating more than 4,600 local jobs. Mr. Roberts is responsible for overseeing C Corp's menu of financing services, managing relationships and economic development agencies and banking partners, expanding the organization's 504 loan program. Prior to joining C Corp, Mr. Roberts spent over 20 years in the banking industry, where he served most of those years as a government loan officer. Welcome, Mr. Roberts.
Chairman Bratt, Ranking Member Evans, distinguished members of the subcommittee, good morning, and thank you for the opportunity to testify the economic successes that our CDC has in Pennsylvania and the job creation that we facilitate through the SBA 504 lending program. My name is Sherwood Roberts. I'm the Managing Director of CDCO PA, and we were certified as a certified development company through the SBA 34 years ago, and we're proud of that fact. We serve the SBA's Philadelphia district and beyond, while CDCO PA offers other federal, state, and local loan programs. The SBA 504 continues as our flagship. I joined CDCO as a loan officer in 2007, just as the Great Recession was approaching. In my time, I've witnessed dozens of examples where small businesses received higher leverage funding and the security of a long-term fixed interest rate. In some instances, these 504 benefits saved the businesses from collapse. In others, it allowed the small business to expand and create additional jobs. In the last 10 years, our dedicated small business-sized staff of 7 full-time employees have received 313 504 loan approvals, which resulted in borrowers committing to over 4,500 jobs over that time period. Over the life of our program, we've been part of more than 644 loans across the Commonwealth and created 1 full-time job for every $30,150 borrowed that we've lent. And that far surpasses the SBA's minimum job requirement, and we're proud of that fact as well. The 504 is once again an even more powerful economic lending tool through the reauthorization of 504 refinance provided by Congress in 2015. This program allows the borrower a financing opportunity to restructure existing conventional commercial mortgage debt, possibly including up to 18 months' worth of eligible future business expenses. This access to capital and comfort, knowing that a portion of their project will be fixed interest rate for the entire 20-year period, may be invaluable as those businesses and our economy continue to grow. I would like to present two examples of small business owners who utilize the 504 program to grow or expand their businesses. A self-employed personal trainer in Bryn Mawr, Pennsylvania, had a vision to take personal training to a higher level by offering fitness services to large area employees and co-develop on-site wellness programs. However, he needed a building to operate and offer expanded services to the smaller businesses in his market. Although his cash flow was actually strong, he would struggle to inject the 20% conventional equity into the project and actually still maintain the capital to grow his business over time. And the 504 loan was a perfect solution for this borrower. As per program requirements, the borrower was required to create 5 new jobs over the next 2-year period, and I am very happy to report that our borrower actually exceeded his requirement by 400%, creating 21 jobs rather than the 5 required, as business growth far exceeded even his expectation initially. Second example I'd like to give you is a manufacturer in Northampton County, a county formerly known for its steel industry. This company is a very traditional manufacturer, rolling, bending, pressing steel to make commercial storage, racking, and mezzanine systems. They employ 104 local persons, and their history actually goes back to the early 1900s, where they originally designed and manufactured motorcycle parts, and then at some point they began manufacturing parts for the Ford Model T chassis. So we've got a long history on this borrower as well. The company leased its current location for many years, and they had the first rights to buy the property. However, again, injecting that 20% traditional equity would nearly exhaust the company's necessary working capital. If the company needed to move, the cost of moving that heavy equipment was going to be drastic, over $1.5 million. Additionally, if the company moved out of the area, they had very much concern of those long-term tenured employees having their ability to relocate, and they had employment issues potentially as well. The borrower really stated that without the 504 program, the company might have folded. With his loan now approved by the SBA, the borrower is looking forward to closing on the debenture and locking in their 20-year fixed interest rate. In these examples, there are benefits beyond the direct employment numbers. The employees at these businesses are earning living wage income. With the prosperity of their employer and the confidence in this dependable income, their sense of financial stability increases. That confidence and their disposable income, in turn, stimulates the local economy. The true impact of 504 lending goes beyond the job creation and the number of jobs out to inferred job creation throughout the surrounding communities. The overall economic impact of the 504 program, the SBA's continual willingness and effort to improve the lending process, and this subcommittee's support of 504 lending will continue to have a positive impact on small businesses, which are the backbone of our economy. Thank you once again for accepting my testimony. I welcome any questions from the subcommittee.
Thank you all very much for your testimony today. With that, we'll go to questions, and I'll just throw out 3 quick ones. I'll read off the questions first and give you all about a minute and a half if you can squeeze it in there. Let me ask questions first, and I'll give everyone a minute to think over their question. For Mr. Williams, in your testimony, you touched on the refinancing policy change that recently took place. Can you talk to us today about this policy change? What has been your experience with the refinancing program, et cetera? For Ms. Vorzek, SBA 7A loan program has experienced rapid growth over the last few years. However, the 504 CDC loan program has fluctuated somewhat. What's behind that pattern? And then also, if the project can't meet some of the requirements discussed, they can still obtain a loan if they meet a community development or policy goal. On average, how often does a project fail to meet the job creation or retention requirements and thus turn to those other policy goals? And for Ms. Mers, I would like to ask you about the role lenders play in this lending program, and can you just walk us through typically what happens when a small business comes to you in search of a loan? Do they usually know about the 504 CDC loan program up front? And so, Mr. Williams, if you can start us off, and sorry for the rapid fire, but.
Thank you, Chairman Bratt. Well, as you know, the Congress made the program permanent in December of 2015, and SBA put forth the regulation changes in June of 2016. We don't have the final regulations, or the final is not out yet. SBA is still working on that, and we're expecting it soon. But the program is working. I think loans are being done, albeit not at the pace that I think everyone was expecting. And a lot of that is, I think, because the program is permanent now, and there's no rush to, on behalf of the lending community, to use it. And I think we're all hoping that that's going to correct itself. So I think that, and as we're working with SBA and I think working through some of the tweaks to the program in the final rules coming out, I think we'll see some improvement in those numbers.
Great, great, thanks, Mr. Williams. Ms. Borzak?
I start with the 7A question.
Good.
Okay, well, it's a complicated question, and I would say that the fact that the 504 program has gone through fluctuations, I think one of the things we saw, the reason the program is not as high as it was during that period, somewhere around 2012-13, is that during that period, we had the temporary refinance program, and if you took those numbers out, the program would probably look a little bit more flat. The 7A program is a program that has a higher cap than it used to in the old days, which means that, now that it can go up to the $5 million, we see that they're doing a little bit more real estate. It is also a program that involves banks, and banks coming out of the recession were needing to book loans, and they were needing to show profitability. I think there was a report yesterday about the ability to give dividends. It was announced where, okay, they get to give dividends. That's a big deal, and what it is talking about is the strength of the banking industry. Part of that strength for many medium and small banks in the country can be the 7A loan program and the ability to book loans under that, long-term loans, and then sell them into the secondary market so they don't have to hit a lending cap within the bank. They can actually lend and then get those loans off the books long-term through the secondary market. The final aspect to that is because there is this secondary market in premiums, it does drop it to the bottom line. So I would say there are dynamics that will drive lenders to move towards the 7A program and away from the 504. But we do find in rising interest rates, inevitably there will be a movement towards 504 because of the fixed interest rate. And so we just have had a very long period of low interest rates. I think that's, it's puzzling everybody at this point and globally, frankly, and so where there are some negative interest rates. And so at this point, we believe that over time we will see as rates rise that there will be more of a movement into 504. I'm trying to stay on the one and a half.
We can go through another cycle.
And then let me go on the second question. I don't have the data because you could have something that met the jobs and you had a public policy goal. So I could have a veteran-owned business that also met the policy goal, or rather that met the job goal, so that it would be difficult to kind of carve that out. Yep. However, what I will tell you is even if a CDC has to use public policy goals on a number of projects, they are held to the criteria to maintain their certification of one job per 65,000. So as they move, if their CDC is moving towards, I think you said something about 1 per 30,000. So he's fine. He's not anywhere close 1 per 65,000. But in areas of the country where you may have much higher real estate prices or equipment prices, for instance, California, you may start drifting because a $1 million building in Oklahoma, if you go to the Silicon Valley, could easily be $7 million. And so you can see the job impact may be identical, but the real estate cost is significantly different. And so what we find is in areas of high real estate cost, we'll tend to have the drift towards 150, 160, and then in the areas of the country that have less pricey real estate and equipment, that we'll see them lower. But I just want to make the point that, again, a CDC has to maintain within their standing 504 portfolio, one job per 65,000.
Thank you.
Period.
And Ms. Mers, we'll get to you in the second round. I'm going to defer to my ranking member, Mr. Evans, with your questions. You go ahead. I'll come back on round two. That's great. Thank you.
Mr. Forsyth, as you know, women-owned and minority-owned businesses often face more challenges accessing credit. What steps are the CDCs taking to help with this issue?
The CDCs have, one of the reasons that the pilot program Community Advantage was proposed was that CDCs wanted to be able to provide capital at different areas of the capital access curve, so that the 504 program tends to be there for more mature, growing, larger businesses. That's what we find in general in the program. The CDCs, in order to meet the needs of more underserved communities, needed to have the vehicle to do the smaller loans and to be able to do working capital and startup and things like that. And the Community Advantage program was designed, its cap is $250,000, and it was designed as a program that probably would involve a lot of technical assistance and assist in moving people up the capital readiness curve. That's what its intention is, to take the minority and women-owned businesses where on that curve and try to move them along so that at some point in the future, as they grow, they would be able to access 504 product, meaning they would be ready to buy their own building or long-term equipment, and we would be standing ready to help them. CDCs also work with the small business development centers to reach those communities. They have the intermediary lending program, ILP. Some of them are IRP, intermediary, the rural lending program through rural development, IRP. And so they look at different products. Ultimately, our goal is to grow these businesses over time, women and underserved communities, in order that they will become 504 eligible and they will be able to access that financing. So CDCs look at that continuum of capital readiness and say, how can we meet these people where they are and then grow them to the next level and support them all during that continuum with either direct technical assistance, or they work with their partners in SCORE or small business development centers or women business owned veteran business assistance centers to help them get there.
Thank you. Mr. Robbins, in your testimony, you mentioned SBA efforts to work with CDCs to improve and streamline the 504 lending process. Do you believe that these efforts are adequate and that they are listening to your feedback?
Thank you for the question. I do. We've found communication has been really effective over the last number of years, where I've been participating at the level that we're able to talk about ideas, we're able to talk about questions, really looking for, and I think it's key as we have the refinance opportunity in front of us, so long as we stay on the zero subsidy, it's making us put a focus on our documentation, our credit underwriting, and overall credit quality. So I really do. I think we're at a position where we continue that conversation. We understand that fine balance, which is oversight and compliance, and the ability to offer this capital to the small businesses of our country.
Let me do a follow-up. What specific ways could the lending experience be more improved? Because you gave an example, one up in Northampton as well as in Bryn Mawr, and I know the one in Bryn Mawr. Talk a little bit about how it can be improved.
I would say it's awareness.
Okay.
I really believe it's awareness. We are talking a lot. I met with a manufacturer this week who's very conventional in nature, actually very strong borrower, and has the ability to pay for a lot of expansion via cash. So we had a conversation. It was no longer than 45 minutes. He deemed it as a great opportunity. I deemed it as a great opportunity, even though the borrower was going to end up going conventionally. They liked the idea of the program. We're unaware of it. We walked out, and I look at that as a true opportunity that the borrower was able to put the conventional lending offer as an apple, compared to the 504 loan as an apple, and compare them directly, and he made a strategic decision. So what we're finding is the ability to talk to people, give them the choice, and at the end of the day, what's best for that borrower for their financial needs is a great opportunity. So for us, it's getting out and actually telling that story, working with partners, as B had mentioned, working with partners to go into communities that have not been served, going through SCORE or SBDC, working with strategic centers of influence or partners that we talk to understand that who could really benefit from this program and telling of the story.
Mr. Chairman, I yield back the balance of my time.
Right, next we'll go to Mr. Trent Kelly, who spent the entire night working on another committee and showed up early in the morning to be here. Thank you, Mr. Kelly.
Thank you. I also want to recognize our chairman, our full committee chairman, Chairman Sherwood, on the end. I offered him my time, and he did not take it. But let me tell you, we're just fortunate on this committee to have a great chairman and ranking member. And all subcommittee chairs and ranking members. It's a great working relationship here, and I think it's about what we do. I mean, America is small businesses. It is the American dream. It is taking a small idea in a garage and turning it into a multinational, worldwide corporation just based on a dream and the ability. And that's what you guys, or that's what the Small Business Administration, it funds those dreams, and especially these loan programs. I want to start with you, Ms. Mers, and I'm just going to go back. Chairman Bratt asked a great question. He said, you discussed the 504 refinancing program. Can you describe for us how this policy change is impacting you in your area?
This is a great question. So I think lenders in general are a critical partner to make the program a success. Any policy changes such as the refinance enables us to sell the program to more members and assist small businesses there. Previously, 504 loans did not fund working capital. With the help of refinance, there is a working capital component that can now be included. And that's actually in big demand with a lot of small businesses because cash is everything for them. So provides more opportunities for us to continue to partner with this program.
And this is kind of, I come from a very, my district is rural, but I come from an even rural area where I grew up. And sometimes dreams are beyond what we know we can achieve or reach. And I think that's where having access to loans and capital and knowing that those resources are available to finance your dreams or help you to achieve those. Can each of you talk about what we can do better to make sure that rural areas, okay, and that would include other, like, inner city's not rural, but it has some of the same issues. And so can you let me know what we can do better to let them know about the CDC loan program and how we can better implement it towards those areas, rural and inner city?
Speaking from a lender's perspective, I would say that awareness and also specifically geared towards loan officers, because loan officers are our feet out there. That they're the ones that market the program to the borrower. They're the ones that match the borrower with the correct program. The right training of the loan officers and maybe more networking opportunities would be a great help. But what we do at Langley, we keep up with the changes of the 504 program, so we are aware how the program works and how we can benefit.
Thank you for the question. It is a vital question, and we in our jurisdictions have both. We have Eastern Shore of Virginia, far Southwest Virginia, and inner city Washington D.C. So we've experienced that, and I think the answer for us has been partnerships, and it's getting out and networking with your small business development centers, networking with your chambers of commerce, and spreading the word. And educating those resource providers that are on the ground, boots on the ground in those local communities, but also taking advantage of technology. There's rapid changes with technology you can take advantage of, and use social media, because that can get you in those communities, faster than you can get there yourself in many cases, and we're starting to take advantage of that as well.
And I'm gonna get Mr. Robbins because he hadn't had very much mic time. If you can answer just real quickly in these 37 seconds.
Absolutely. I think I'd like to mirror some of what Mr. Williams said, is that idea that it's really about leveraging the opportunities. So the groups that we try to talk to, we as a regular calling effort try to get out to the county or state-based economic development organizations who are going to touch these people maybe on a more daily basis than we have the ability to. We're a 7-person staff. We go out through trade organizations if we have that ability, and then we go out also through chambers of commerce. So it really is about kind of leveraging our opportunities to get out there and talk about it. I think whether we go back, it was a tough economic time, but we were getting media attention during and approaching and coming out of the recession about the SBA. So I think the SBA was in the news scene. It was being talked about for a tough economic time, but the SBA was out there. So I think as borrowers or potential borrowers, hear about this program, know of the opportunity, have that confidence to say, I do have this dream. I need to ask who to talk to and go out there. It's that communication that really makes this effective.
And I've exceeded my time. I yield back.
Thank you, Mr. Kelly. We turn to Ms. Chu from California.
Thank you so much. Ms. Voorhees, it's been a pleasure to work with the NAGCO and the National Association of the CDCs, and thank you for your help in pushing for the CREAD Act, the Commercial Real Estate and Economic Development Act, of which I was the author. I was so thrilled when my bill was included in the 2016 omnibus package and signed into law by President Obama. And of course, as you've said, the 504 CDC debt refinancing program allows small businesses to refinance existing commercial debt with long-term fixed-rate financing so that they can free up their capital. This had been a successful pilot program in 2012, but then had been allowed to lapse, and since then we've been attempting to get it put back into law, but finally, with the help of this committee, we were able to get it into that omnibus bill. And since the refinancing program went into effect in June of 2016, CDCs across the country have approved 231 loans for small businesses. That amounts to $254 million in loans to help businesses grow and expand. So, Ms. Vorshak, do you expect that this trend in refinancing lending will increase?
I forgot that last time to turn on the talk. Thank you for that question. Absolutely, I do believe it's going, in particularly as awareness. I think part of it is you go in and you educate banks, and I remember when I was running the CDC, I thought, okay, I've educated the banker about 504 and I can let it, I can move on to the next bank. But what I found is if you didn't touch base with them pretty regularly, they forgot. And so I would check in and say, hey, how you doing, Bill? This is Barbara Vorzek with California. Oh, I've got a deal on my desk, and, it's a great thing you called. So it very much is about continuing the education process, even when you think you already did it. And then following up. And I think both of them really talked about, both Sherwood and Wayne talked a lot about getting in, and Ms. Merz also talked about education of the people who are actually on the ground. And we are watching an upward trend in the debt refi, and so we absolutely believe it's going to grow. And particularly as rates begin to rise and as balloons come due, we're going to see more and more small businesses coming in and taking advantage of it. But it's on us as an industry to make sure that we're calling those banks and credit unions and other lenders and reminding them, hey, we've got this great product for your small businesses, so don't forget we're out here. It's just a matter of communication and keeping that open all the time.
And another great thing that happened with the 2016 inclusion in the omnibus bill is that it made the program permanent. Have you seen the benefits for your industry since then?
I think knowing that it's permanent takes away a certain level of anxiety, quite frankly. And it's also much more helpful when you're going to discuss it with a bank or with other community partners that they know this isn't going to disappear and that this is a permanent program. And so absolutely permanency settles everybody. And it also enables over time for there to be improvements over time, because we know it's a permanent program and things will change, markets change, small businesses change, and the program has the ability to change as well.
Do you think there's more that we in Congress or perhaps the administration could do to help more small businesses take advantage of this program?
I think just talking about it in your districts would be fantastic. And also remembering you've got a whole network of CDCs nationwide that are more than happy to help you and bring you to visit some small businesses and just talk about it. And SBA has been doing its own form of marketing, and the administrator has been out there. And so the more that we are talking about it, the more small businesses that will be aware of it, and lenders. We want to make sure the lenders are aware of it too.
And SBA has been attempting to streamline the 504 loan application process, but there are still some potential lenders that argue that utilizing the program is too burdensome. How would you respond to this concern?
I would say that the SBA is in the middle of what I've called, or what we call the 504 Modernization Project. and it's being phased in as we speak. And so, for instance, E-Trans is going to be turned on or is operating right now a dual system, and then it will become the new system. But beyond that, the new Central Servicing Agent contract, the CSA contract, that was let recently, included in it technology technology budget, basically, for that contractor. And so they are going to be involved in what will ultimately be a birth-to-grave system of document management and data management. And so from so many aspects, it will enable a more, as the administrator said, efficient and effective system. It absolutely will, because for reviews or for a loan, you'll just reach into the cloud and be able to access data and access documents related to that small business loan. And so the SBA is currently moving towards a much more efficient and unified system for the 504 loan program. So lenders and small business borrowers are going to find it gets more and more streamlined over time. And thank you for allowing me to go over.
Thank you. I yield back.
Thank you, Ms. Chu. Now we turn to the full chairman of Small Business, Steve Shabbat, with some questions.
Thank you very much, Mr. Chairman. Obviously, CDCs and the 504 loan program have been critical to an awful lot of small businesses all across the country. My first question, I would invite anybody who wanted to talk about this. Would you comment on sort of the way urban areas traditionally have utilized CDCs and the loan program versus more rural areas? I'd welcome that from really anybody who would like to comment.
Well, speaking from a lender's perspective, first of all, thank you for the question. I think we see more participation in the 504 program from an urban area versus a rural area, and I think that that is simply because there's more awareness, there's more outreach in urban areas. There's also the lender's footprint tends to be more in urban areas, so we reach out to our members. Word of mouth is a huge component when we sell a commercial lending program to our members, and that tends for us from my credit union perspective, that happens more in urban areas than rural.
Thank you. Anybody else want to comment? If I'll move on to another one. Relative to publicizing the availability of the 504 loan program, any recommendations that you would make? We have obviously a new administrator at the SBA, and she's really come in, I think, in trying to shake things up and make things better, and I'm very encouraged thus far with what I've seen. Any recommendations there as to how we can better publicize this, and even beyond that, any recommendations overall and changes you'd like to see at the SBA? And I'll invite that from anybody.
This is a great question. Thank you for that. I think there are some challenges when we are selling the 504 program to our members where we would like to see improvements. A lot of our members don't quite know about different SBA programs. They know that the SBA is there to promote small businesses. There's government guaranteed lending available. So it is the lender's job to pair the borrower with the right program. Then it becomes a challenge to explain the process, because usually it's one property, let's say commercial real estate, it's one property that the borrower is looking to purchase. And the common question that we get is, well, how come there's two agencies now, and will I be making two payments on one property? So we have to explain the process, maybe a somewhat of a complex process, especially to a member that did not know about the 504 program before. So I think a big improvement would be for lenders to have the ability to collect the payments and then distribute to the CDCs. So then it's one property, one payment. Another improvement, I would say, would be the prepayment penalty. A lot of borrowers are hesitant about the 10-year prepayment penalty. I would say this is more of a psychological factor from what we have seen. I'm buying a property and I have to commit to stay at the property for 10 years. So I think an improvement to kind of lower the prepayment penalty to, let's say, 5 or 7 years would be great.
Thank you. I've got about another minute on the clock. Any other members like to see some improvements?
Thank you very much. I would say it's that conversation. What we find is that we just need to be out there every day. It does not keep me up at night. Rather, it wakes me up every morning to think when I meet someone at a chamber function or a business mixer of something, and they're talking about the idea that I just bought the building. I wish I would have known about the 10% ability. That capital staying on my balance sheet would have been very powerful. So for us, it's really about getting out there, meeting people, and that's either leveraged through organizations. So I don't have the direct marketing channel and a game plan here today, but it really has that idea that if people know that this exists and it is of benefit to them as they grow and expand, that's powerful. That's very powerful.
Yes, sir. Mr. Williams?
Yeah, I'll just offer that in terms of most of the changes that I think that we've seen that might be needed are minor tweaks and operational changes with the agency and, standard operating procedures, SOP. And I think the agency's working through that now, and they've been very receptive to working through that because I know there's a big, massive rewrite that they're going through, and they've been welcoming of comments, and I think that's been a very good sign, and we've been very appreciative of that.
Thank you very much. My time's expired. I yield back.
Thank you, Mr. Chairman. We'll turn to Ms. Murphy from Florida. Thank you.
Great. Thank you, Mr. Chairman. So as was mentioned on the panel previously, there's a difference between the distribution of these loans between rural and urban areas. Do you also see a difference maybe from state to state or maybe geographically across the country? And then my understanding is that there's some geographic restrictions on CDC entities as to how far their reach for their loans can be. And do you think that plays a role in creating some of the inequities in the disbursement of access to these loans? And then what do you think can be done to ensure that these underserved areas have equal access to capital through a CDC? Anyone?
Well, that's a multi-level question. Yes, we definitely do see concentrations in the country. Some of it has to do with just the nature of, if you look at the number of small businesses, the sizes of those small businesses, and the growth patterns, and the tendency to focus on real estate. So we will see concentrations in states like California or Florida. We definitely see some of that. One of the things we've seen over time, and rural areas was brought up, has been brought up by a number of you, that in rural areas, and particularly before the Great Recession, we saw that banks would actually extend to very high loan to values for real estate. And even coming out of the recession as the recovery was getting stronger, we were seeing some banks that were going to 85% loan to value. And of course, 504 is 90% loan to value. We don't see that as much in some of those territories where you see a great deal of 504 volume, where a bank will not go that high, and therefore the 504 becomes really the critical vehicle for that business to be able to do 10% down. And so I think the dynamics are different, and we see that across states, and we see that in rural versus urban areas, and the nature of the bank or the credit union or the lenders are different in those territories as well. The second part of your question was relative to does the amount of CDC activity or rather their geographic. All CDCs are statewide now. Some are multi-state or have area extensions. I'm not sure how much that actually factors into what you are speaking to. I'm not sure if making a CDC a 4-state entity instead of a 2-state is necessarily going to increase volume. I think concentrated efforts and where the agency or the public policy goals are pointing towards rural development or pointing towards downtown revitalization, those kinds of things will in fact increase activity. In California, when I was doing inner city downtown redevelopment were part of the public policy goals under one broad, I think it was called Business District Revitalization. And so we saw a lot of activity, particularly in, I know it's, we don't talk about it anymore, but enterprise zones. I did a lot of activity in the enterprise zones, and it really focused, particularly in LA, in Pacoima, in East LA, in South Central LA. We did a lot of volume, not just because of jobs, but also because of the public policy goals related to downtown revitalization. The same thing happens in rural. And I forgot the third part of your question. I apologize.
You covered the question, but thank you. I appreciate that. And Ms.
you.
Mers, my next question is for you. In your testimony, you had suggested the need for greater flexibility for 504 funding of for certain types of businesses, and you specifically cited the example of a loan made to a restaurant. But there were restrictions where they couldn't use the funds for items such as smaller furniture or equipment. When a situation like that occurs, what other loan products are you able to offer the borrower?
So Langley Federal, we are a partner with the SBA, and we offer a wide range of products. So in situations like this, we would be looking at an SBA product to see if we can do, like, let's say, an SBA Express loan to assist the borrower to purchase those assets.
Thank you. The remainder of my time.
Oh, thank you very much. I think with that round, we'll conclude our testimony. So thank you very much, everyone, for being here today. I think it went very well. Very, very good witnesses and information today. As direct participants in SBA's 504 CDC loan program, your insights and ideas were very valuable to everyone on the committee. In order to conduct proper oversight, it is important to take a step back, and so today our conversation will be important as the committee continues to examine all of SBA's lending programs. I ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. Without objection, so ordered, this hearing is now adjourned. Thank you all very much.